This is Alan Bush with ADMIS with the daily financial forecast for Thursday, September 3rd. Starting out with the stock index futures, we did see gains in the overnight trade. This linked to basically a reprieve from the onslaught of weaker Chinese equity markets, with mainland Chinese equity markets closed for a military parade. So Chinese markets closed, at least mainland markets closed today and Friday. So with that potential pressure out of the picture, at least temporarily, stock index futures were able to advance in the overnight trade. Also, we did see some additional gains. This after Mario Draghi, president of the European Central Bank, made some very dovish comments concerning ECB interest rate policies. So that took stock index futures to new highs for the day. Also, we do believe that a new wave of economic stimulus is coming from many of the major central banks around the world, and I think that will ultimately rescue this stock index futures market. Now, moving over into the currencies, once again, the dominant influence was the comments from Mario Draghi. This put pressure on the euro currency from an interest rate differential point of view, which also was the main reason for the dollar to advance. But I'm inclined to believe that later this afternoon we'll see some of the gains in the dollar given back and some of the pressure in the euro currency being alleviated, mainly on ideas that if the ECB is becoming more accommodative, it's going to become more difficult for the Fed here to become more hawkish. Also, we are seeing lower prices in the British pound. We did have some weaker economic numbers out of the UK, and it now looks like prospects of a Bank of England rate increase next year have been pushed back, or at least farther out into the future. Also, lower prices for the Australian dollar after retail sales in Australia coming in weaker than expected. And it was just yesterday that the Australian dollar broke the 70-cent level, and that was the weakest point for the Australian dollar in over 6 years. Now, over in the interest rate markets, good gains, much of this linked to Mario Draghi's comments, possibly expanding QE. Of course, the offshoot is then that the Fed is less likely to raise interest rates here, and that is supportive across the board in the U.S. interest rate futures markets. Also, the probability of a rate increase at the September meeting before Mario Draghi's comments was at 27%. I'm inclined to believe now that that probability is lower, maybe more toward 20 or 22%. So we continue to believe that the Fed will be very slow to raise interest rates, possibly not at all this year. So once again, good trading, everyone, and remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.